So why are uranium stocks absolutely getting thrashed in the financial markets? Last week's video, I talked about how the URA ETF was actually outperforming the S&P 500. Today, we're going to talk about the Sprott Uranium Miners ETF. This is a pure uranium mining play. I think that's more in line with what people want to know about. And so the Sprott Uranium Miners ETF is down 7% year to date. The S&P 500 is up 4%. I like the URA ETF more because it pays a nice dividend, a big juicy dividend that will pay you to wait for the thesis to play out. Passive income. But if you love the URNM ETF and these junior miners because you want that massive upside, those life-changing returns, let's dive into exactly why these assets are massively underperforming the rest of the market. Well, this is the only reason why. Fed officials are worried about tariffs' impact on inflation and see rate cuts on hold. Minutes show. So when you value a uranium miner, you take into consideration all the future cash flows, all the future expenses, and the interest rate. The higher the interest rate, the less those cash flows in the future are worth. So when the interest rate that these mines need to pay on their loans is 8%, the future cash flows are worth way less than when the interest rate is 4%. It's hugely significant. These mines are starved of cash. They need access to affordable capital, right? They can't be profitable necessarily if rates are too high. And so all speculative early stage assets are suffering in this environment. Growth technology, real estate, small businesses, miners, junior miners, all suffering on the news that inflation could remain high and therefore interest rates could remain high. Interest rates are the oxygen of the financial system. So nothing can really survive that well in an environment like this, except for maybe the massive multi-trillion-dollar tech companies that have hundreds of billions of dollars of cash in their books and don't need financing. S&P 500 ends down as hot U.S. inflation data hints at fewer rate cuts. The whole market is totally unhappy with this. Look at the 10-year yield. Look at what the 10-year yield did in 2019 to 2020. It plummeted down to zero. That's when interest rates were practically zero. Money was practically free. Mines could get financed. Look at what the Sprott Junior Uranium Miner ETF did in that time. That's around the time it went from $9 up to $44, right? And we've been stagnating since because the macro environment is not favorable, because interest rates are high, because inflation is high, right? So nothing is doing well. Look at real estate that's in an average or mediocre location, hasn't really gone up. You can't afford a house. You can't afford a uranium mine. So that's why this is flat. That's why it continues to go down. The market is pricing in higher interest rates for longer. That is the only reason. And look at where interest rates have gone, right? They've gone straight back up and we're just stagnating in this macro environment. So speculative assets will not do well in an environment like this. So if you want just pure safety, go into the NASDAQ, go into some big cap ETF of massive stocks that won't necessarily provide life-changing returns. But if you want to DCA into speculative assets that can potentially be life-changing, well, then have some patience. Now, it is true that the U.S. government is massively incentivized to juice financial markets and to eventually do what they can to usher in liquidity into the system, right? The U.S., everyone is suffering. The U.S. government is also suffering. We have to pay a massive amount of interest on our debt if rates are high. So they're figuring out ways of behind the scenes goosing financial markets with liquidity, right? The more they debase the currency, the more liquidity they rush into the system, the more money they print, the better everyone does. Fed minutes. Several participants suggest halting or slowing balance sheet reduction pending debt ceiling resolution. There it is. Quantitative tightening coming to an end this spring. Reminder that every FOMC member has unanimously approved these minutes. This is intentional, right? So Donald Trump wants interest rates to fall. Trump wants lower interest rates to go hand in hand with tariffs, but yields are soaring after inflation data came in hot. So this is for the first time in a long time, in many decades, the United States can't just dictate what interest rates are. And the reason for that is because the world is starting to lose confidence in the U.S.'s ability to pay off its debt. It's a difficult proposition to get like 1% passive income yield on a 10-year bond. Locking your money for 10 years to the U.S. government and getting 1% when inflation is getting out of control, it's a difficult proposition. So the United States is really trying to figure out how they can get interest rates down. Now, regardless, we know they're going to print money massively. And so in this example, the U.S. government is trying to slow balance sheet reduction, right? They've been trying austerity. They've been trying to quantitatively tighten. Once they quantitatively ease and usher in liquidity, it's game over. These assets skyrocket, right? So it's just a waiting game at this point, and it gives us the opportunity to stay on top of what's going on with these assets and whether or not there is massive upside for some of these small cap assets. The uranium spot price goes up when there's way more supply than there is demand. Look at what's happening in 2025. We've covered this. This is secondary commercial inventories to fall below 3% of global uranium. So the reason we've been in a multi-decade supply crunch for years, but the reason the price hasn't really moved is because secondary commercial inventories have been massively high. That's all changing in 2025. That's plummeting. We're going to need to get uranium from out of the ground from these miners. These miners are going to have to be incentivized to get it out of the ground. Price is going to have to rise. I've showed you that chart before. It just speaks to how huge 2025 and beyond should be for the supply-demand fundamentals of this asset. China's nuclear energy boom versus Germany's total phase-out, right? In blue, we see Germany trying to phase out uranium, and in red, we see China massively compensating for that. One of the biggest countries on the planet investing heavily in nuclear, which is going to increase demand for uranium. Trump's raised the tariff tax paid by U.S. nuclear utilities to 18% on enriched uranium imports from China after delaying a 10% tariff on Canadian uranium, creating a uranium market overhang, slowing spot market activity again. These tariffs are going to make it more and more expensive to acquire uranium. Again, these utilities need uranium, so they're going to pay whatever price they have to pay to get it, right? And these tariffs are just throwing a wrench into global trade. You're India's top power firm to invest $62 billion in nuclear capacity. So obviously demand for nuclear skyrocketing around the world. Japan raises nuclear power goal in post-Fukushima shift. So we have India, we have Japan. A renewed push for nuclear-powered container shipping is underway with the goal of reduced emissions, extended range, and operational efficiency. On February 12th in Houston, South Korea's HD KSOE revealed its 15,000 TEU class nuclear-powered ship design with enhanced safety and economic efficiency. On February 10th, the CEO of ShipNext unveiled the Remora concept as the future of maritime shipping. At its heart is a nuclear-powered Panama-class mothership with a 1,000-ton gantry crane that can discharge up to 60 electric autonomous barges. So nuclear is the future of space travel, and nuclear is the future of maritime travel. It's also the future of artificial intelligence. Data center power demand almost doubled in Virginia. France pledges to build 1 gigawatt of new nuclear to speed up its AI ambitions.
All in for AI, but the problem is to do it just in our country, you need twice the electricity just to open up and be the top of AI. You need twice the electricity that we have right now in the entire country. If you take all of the electricity, you need more than twice. You need double what we have right now just to fuel this new industry that's growing. I was amazed when I heard that number. And they all said, how can we do this? Because, you know, in China and various other places, you can probably get it with the shake of a hand. But in our country, you can't. But now you can, because I'm declaring a national emergency in order to get fast approvals. And we're going to have, if you build a plant, you're able to build an electric generating facility right next to your plant. So you'll be making your own. You won't have to count on utilities. You won't have to count on an old grid that could fail, could get hit by something, bad things or good things. But you're not going to have to worry about grids. You'll build your plant, and you'll build your essentially you'll become a utility in a way. You'll build your own electricity. If you want to build extra and put it out and get paid for that, you're going to be able to do that. You could put it back into the grid, but you're going to be able to build with your plant a generating facility. And we're going to get you Lee Zeldin, head of the environmental group, various groups, and we've got them unified now, but we're going to get you very fast approvals, and they'll be approved so fast your head will spin. And we're going to get that whole industry started, and we're going to be the head of it. We're leading right now. We have the greatest brain power. We're leading right now, and I expect that we're going to be leading by a lot, but we're going to get you the energy very, very quickly. That would be the one thing that everybody was concerned. How do we have that much electricity when Los Angeles has blackouts and brownouts right now? And there's a lack of electricity, but we're going to get it at levels never seen before.
The people building the future of AI right now realize that the only limitation currently is electricity. That electricity is coming from nuclear, as France just proved in this one example. That's the future that's being built before our very eyes. Most of it will run on nuclear. Most of that will run on uranium. We know why the stocks are falling. It has nothing to do with the long-term fundamentals.